Good afternoon, everyone, and welcome to this week's episode of my YouTube channel. My name is Jake Fryman. I'm a realtor here in Dayton, Ohio, with the brokerage Keller Williams Community Partners. And each week I jump on this channel and I provide a little bit of an update into the real estate market. I provide some insight into what it's like to be a realtor and to offer some helpful tips and advice for people looking to maybe buy or sell. So on this week's episode, I wanted to discuss the market, the current housing market, and the way things are going right now. Relative to the economy, relative to supply and demand, all that good stuff. So you've probably seen some stuff going on right now in the news about the economy overall, the stock market, how things are going, the potential for a crash, the potential for a recession, all that stuff. So kind of just wanted to address some of that today and talk about what's going on. So first off, I will say again, I've talked about this before on this channel, but this is not like 2008 where there was that big housing crisis. You know, you saw a ton of foreclosures, you saw a ton of houses go under, a ton of loans defaulted on, and it just really crashed the whole system. It's not like that anymore. The Dodd-Frank Act really helped to regulate the industry a little bit more and to regulate the lending process and to really prevent that from happening in the future. A lot more stringent requirements are now in place for buyers when it comes to getting a new home. So I would not count on something like that happening where you have this massive crash. You don't want that to happen. That's really bad for a lot of people for a lot of different reasons. So we don't want to see that happen again, right? And I don't think that's what's going on right now. It was just a lot of things going on, especially with the pandemic and the economy, things like that. You just saw rates go down very, very low overall, which affected mortgage rates, of course. So now you're seeing that where it's starting to bounce back up a little bit, right? We're seeing interest rates going back up to 6-7%. Normal range would be 5 to 6%. I mean, that 2 to 3% range that we were in for a little while, that was crazy. You saw a lot of people refinancing, a lot of people jumping to buy with the low rate. They could get more house for their money. Probably not going to see that again, or at least for a very long time. But what you're seeing now are interest rates kind of in the 6 to 7% range. By next summer, they might go back down to 4 or 5%. It's really tough to tell. I mean, there's no schedule for rates. It all depends on what the Fed does, what's going on with the economy. It's all very, very intertwined, but also not directly related. It's very complex the way it works. But you're possibly seeing a recession coming up in the economy overall. Not necessarily a bad thing for the housing market. It will be for the folks who unfortunately lose their jobs, but it's not looking like this will be a massive economic crisis like we saw 15 years ago in 2007, 2008. A little bit different time. It'll actually be a little bit better for buyers because yes, you are paying a higher rate, but you're seeing less competition now. We're seeing some buyers getting priced out of the market that they were once in because their rates are pricing them out of homes that they could have previously afforded. Higher rates, higher monthly payment, less people for homes now. So if you're a seller, it's still a great time to sell. Demand is still there. I mean, I'm seeing it right now. There are more listings popping up now on our realtor site, the Dayton Board of Realtors site. I'm seeing more listings now than I was last year even. So we're finally catching up in that regard. There's finally more supply to meet demand, but demand is still crazy. I mean, if you still see a house you want, you've got to really be on it like that, because if you don't, it will be gone to someone else. So the demand is still there, but things are slowing down a little bit. I don't foresee a giant crash in home values. Like I'm seeing some people predicting that, like homes will be worth significantly less next year. From what I'm seeing and from all the stuff that I'm reading from economists, both from the National Association of Realtors and other economists on the internet, it's looking like we'll see a stabilization of sorts. Maybe prices won't continue to escalate the way they have been, and it'll kind of settle out a little bit. It might go down a little bit, but I don't foresee a giant cratering here where a home that was going for $350,000 next year or this year will go for $250,000 next year. I don't see that happening. There was a viral thing going around on Facebook, some guy saying don't buy a house this year because next year a home worth $300,000 will be worth $200,000 and buy it then. That is horrible advice. Do not listen to that. Do not get your home buying advice from some Facebook meme that you're seeing circulating around. Talk to a professional like myself, another realtor, or even better, talk to a lender. I know a ton of lenders. I can hook you up with one if you're really curious and want to really learn more, but please don't listen to Facebook for that kind of stuff because it's probably fake news. So, but anyway, I do foresee things starting to settle down a little bit. Demand will still be there, so if you are looking to sell, still a good time to sell. You may not get as much as you got as you would have gotten a few months ago, but you can still get a pretty good amount for your home. And on the buying side, yes, rates have gone up, but still buy, because today is better than yesterday. The sooner you can get out of your lease, the sooner you can get started to build up some equity. That's awesome. You should do that. And you can always refinance down the road then when rates go back down. You can refinance anytime. I bought my house 3 years ago, refinanced, really helped me out with my monthly payment. So it's never too late to refinance, and you might as well go ahead and buy now to start building up equity, and then who knows what could happen in a couple years. Maybe you could even sell your current home, move into a home you really, really want, or that you find would be better for your situation in a few years. So that's what I always tell my potential buyers. Now is the time to buy. Better than yesterday, better than tomorrow, now. So just keep that in mind, and don't worry too much about what happens with the economy. I mean, there's only so much we can do to prevent a recession at this point, and it's ultimately up to what the Fed decides to do and what the government decides to do to regulate rates, regulate the economy, keep things under control. And as realtors, and mortgage professionals, we in the industry will just have to respond accordingly. But that's why we are here, to help you guys out with this process, to advise you and to guide you along the way. So don't panic too much about what's going on. If you're still looking to sell, it's still an okay time to do that. And if you're looking to buy, it's still a good time to do that, because 6 to 7% rates, that's kind of the norm, really. I mean, 5 to 6% is probably better, but if you missed out on the 2 to 3% moment, sadly, you probably missed out for a long time on that. But that's just the way it goes. It's just it's all about luck and timing with this industry. But hey, it's still a great time to look into it, though. So I hope this was helpful. Hope you're able to learn a little bit more about what's going on right now with the market. And if you have any questions, please let me know. Thank you, and have a great rest of your week.